LiteFinance, the world of financial freedom.
Hello, it's Monday, 16th of October, and of course it is a time to start the market forecast for this week with the focus on USD as usual to make a trading plan for Euro USD. Okay, so today there are no major events or data publications that we need to mention. On Tuesday, labor market data from the UK, retail sales from the US and Canada, inflation data. On Wednesday, we will get Chinese GDP data, UK and Eurozone CPI inflation and crude oil inventories. On Thursday, we will get the Philadelphia Fed Manufacturing Index and discussion with the Fed Chair Jerome Powell in New York, which shouldn't be something too important, but as always, it is better to listen to it at least in the background. Finally, Friday will be the rather a calmer day because we will receive only data on UK retail sales and producers' inflation in Germany. Okay, now let's move on to fundamentals. The armed conflict in the Middle East has sharply increased the demand for gold and US Treasury bonds. Treasury yields initially fell and then stabilized at lower levels than at the beginning of the second week of October. However, the USD fully recovered after the fall in debt market rates. Is yield no longer the main driver of the Euro-USD decline? Well, attempts to explain the USD strengthening by its status as a safe haven asset look skeptical. In fact, when US debt rates fall, gold, the yen, and the franc begin to act as a safe haven asset. The US dollar in turn supports rising oil prices caused by the armed conflict in the Middle East. New approaches to production, especially hydraulic fracturing and horizontal drilling, have made the United States a net gas exporter. Since 2019, the US has been a net supplier of energy goods in general. The US dollar now reacts to changes in oil prices in the same way as the Canadian dollar. That is, it strengthens during the Brent and WTI rally and falls when oil prices decline. The growing correlation between the USD index and oil creates additional difficulties for the global economy. The situation looks especially problematic for the currencies of oil-importing countries. A bullish oil market is worsening the current account and terms of trade. So it is not surprising that the IMF in its latest review raises its forecast for US GDP growth and downgraded the estimate for its European counterpart. Currency weakness increases the risk of a new round of inflation. This puts additional pressure on central banks, which recently stopped tightening monetary policy. The ECB also signaled that the deposit rate will remain at 4% for a long time. At the same time, the head of Bank of Spain, Pablo Hernández de Cos, notes that the recent rally in Eurozone bond yields was due to rising US debt markets rates and not to expectations of a continuation of the ECB's monetary restriction cycle. Everything in the world is now interconnected. Rising treasury yields, a strong dollar, and an oil rally are putting additional pressure on the global economy. Its prospects look bleaker than those of the United States. As a result, Euro-USD bears will be able to take advantage of American exceptionalism. Moreover, experts surveyed by the Wall Street Journal reduced the chances of a recession in the US economy in 2024 from 54% to 48%. Thus, the dollar becomes a commodity currency and takes advantage of rising oil prices to maintain its leadership position in Forex. If there is no sharp decline in treasury yields shortly, a breakout of the support of 104.95 will increase the risk of a continuing Euro-USD decline in the direction of 104.15 and 103.5. Okay, and that will be all from my side for today. Thank you guys for watching and goodbye.